Audio check. 1, 2, 3. Audio check. 4, 5, 6. Audio check. 1, 2, 3. Test audio. All right, good morning and welcome. It's Wednesday. It's time for Strategy Planner. Quite a bounce overnight. It was quite a plunge yesterday afternoon. Let's get the perspective here. Recall that yesterday's upside target was 53.30, and as long as we were heading to 53.30, that being in proximity to such close proximity to Friday's lows, Friday's higher prior lows, it was likely to, at 53.32 at least, that was likely to be engaged. And that's just a landmark. That's not actually a target that satisfies buying pressure and accumulation. That was likely to have gotten to 53.42, 43. They actually just touched 42. And based on the timing, right then, it could have been any other time of day or most of the times of day and been irrelevant, or at least not had any other timing element, because it did coincide with the final hour's entry. That kept high threshold for performance on buyers, such that they couldn't afford to stand still, and any kind of retracement under their first reaction was vulnerable to reversing or retracing to whatever degree. And we got lucky in that it was a plunge back down into the opens range. 80 points in the final hour. And pretty direct. One big bounce right into its resistance. So an even better entry than just being close to the turn, literally at the turn. In both of those instances, 53, 42, 43, and the bounce potential, which was 53, 19 to 21, it was just a little bit, but as it happens, it was, in both instances, a little short of their maximum potential. In these bounces, I prefer to see them overlapped as opposed to the lower end just barely piercing into or probing into their range, their cluster of potential resistance. Just really thoroughly rinse out buyers, weak-handed buyers. In both instances, there was just a maybe a little impatience from way up there. Not really relevant if we were gapping down right now. But looking back, those two instances of sellers being impatient to the smallest degree, but consecutively, and it wasn't nominal. It was really two patterns that didn't fully play out. From a contrarian perspective, that is, from way down here, potentially bullish. Not if more sponsorship or reinforcements had arrived overnight to be producing a gap down, and they're not. So we have to look at that and wonder. This is where this plays. That wasn't it. We have to look at that and wonder whether the impatience is basically a measuring point to identify an even bigger probe back into Friday's range. Or more so. This is a gap fill to a degree. It's already been filled. The proxy gap, the 61.8 retracement between the cash session close and Monday's open, Friday's cash session close, already retraced, probed a little bit more. Often those will come in pairs when they're literally a gap fill. We haven't literally filled the gap. Back to Friday's close, which was at 74, the cash session closing equivalent, 77, 76. But if 76, the actual cash session close from Friday, were filled, and actual gap fills tend to come in pairs, that starts getting us up to Thursday's close. Thursday's cash session close is 81. So this could be an even bigger corrective bounce, and I don't want to dismiss the potential for that to extend even more so. But first things first, are we actually going to probe yesterday's high? Are we going to fill the gap back to Friday's cash session close and put into play the potential, not a requirement, but an attraction anyway, back to Thursday's cash session close? That starts getting some interesting stuff going. Note the handle change every time that happens. So 54.81, it's a big bounce. That doesn't necessarily happen in a single surge. It is higher prior lows, multiple consecutive sessions, multiple patterns that relied on that area, thereabouts, as support. That's a big correction. And correction is the word, by the way. Not just because there's unfinished business below, but correction that we would expect to react down and retrace the entirety of the bounce. That's really what we're doing anyway, is if not immediately intraday Monday or yesterday or now that there's been a bigger bounce tagging up, so that the gap beyond all priors from Monday, now that it has retraced, now that the bounce has retraced a prior session, has activated this as an attraction. The gap fill back to 51.59. Sunday night's low, Monday's pre-open low, the Globex trend extreme, that requires retest as well. Both of those requiring intraday retest. These two, they're not calculable Fibonacci projections, so just an overnight touch won't suffice. 51.59, 51.20, these need to be tested intraday. And they're not satisfying selling pressure, they are landmarks, so they're likely to be probed. So incorporating those into our analysis, we know that any bounce, just contextually, is just temporary. So, looking at, and by the way, the inverted head and shoulders here incorporates or combines pre-open overnight along with intraday. So it's not an actual, the sentiment isn't cohesive. It's not actually a head and shoulders. There's supports and resistance in either case. More so than any retracements do or are going to be influential if they're revisited, but they're not otherwise predictive. So I can't necessarily take projections as we normally would from the left shoulder and the right neckline. This is in general. And rely on their Fibonacci projections to be influential. But we'll keep tabs on them anyway. But that's where we're at. Hope springs eternal, especially in the earlier stages of a bear. We already had our trend change signal at the high. That too, very interestingly, could not have been any closer to the actual high. Often a trend change is going to be, by virtue of how the top is formed, the trend change won't be signaled until more of prior lows are broken. But this just could not have been signaled closer to the actual high. So it's been a very abrupt just a paradigm shift that we're going to get a bigger bounce. We've had these plunges. I'm not going to put it past the market. But we're not gapping down. Despite yesterday's late plunge, we didn't extend down Monday despite the overnight historic Globex plunge. So you run out of sellers. It wasn't necessary, but that's where we're at. Is if the open is maintaining this overnight rally, and as close as it's come to the high, even though it's only overnight, it really does need to be tested. If sellers were to suddenly, which we don't have a catalyst, by the way, there's, again, a very dry economic calendar. But if somehow price were to find some excuse to start falling and falling pretty close back to yesterday's lows, at this stage, coming from this level, this close to the high, having retraced this much of the plunge, we'd view that as refueling buyers, injecting pessimism versus the optimistic overnight, and therefore be bullish from a contrarian perspective. So it seems like a pretty fluid situation. I don't want to game out too much here other than those general contextual observations. But meet back here at 9:15 and we'll see what level is greeting the open and what immediately actionable setups there might be from that. But just spoiler alert, we're probably going to be looking at a bigger probe into Friday's range, and if it in fact fills the gap back to Friday's cash session close at, call it 77, probably doesn't reverse down on a dime from that, but there's going to be some resistance around there, depending on the approach. Then 5400 handle starts coming into view, if not very likely, and so on. All right, any questions about any of that? Please ask. On other markets, let's start with Bitcoin. So my bounce objective, which had originally been an opportunity for the chart to have, it was basically an objective on the way down that opened up under our 60,000 objective, 60,200. The room for noise really around 60,200 as a fade that failed, and failed spectacularly, putting into play our next target at 51. 51 tested real aggressively and retested. 51 was retested. The actual spike low that tested 51, its low wasn't retested. And the formation itself, not typically a bottom. Reversal to some degree. Not a knife catch any longer. But our objective on that bounce, the potential, not actually a requirement, but the potential back to that original area, call it 58, 59. It's a little more precise than that. But that's tested now. That's been tested. It's being tested now still. It was tested, began being tested overnight. That's really the maximum bounce potential to maintain what is still a likely retest of that low. The next lower objective, and sorry, let me just get that bigger view into play. Bigger play into view. Get it? There it is. 48.2 to 48.6 being the likely objective on the retest of 51, or 51's tests in this case. And really my focus is on 48.2. There's a little more weight behind that, a little more probable of a pattern, likelier attraction. But anything in that range, preferably toward the lower end, again, preferably 48.2. But that being the likely target on a retest of these lows. And that's especially, that would have been credible to have retested that low and to have tested 48.2, 48.6 already from a lower level. That impatience by sellers would have helped to form a bottom, or at least would have helped to given us that insight into a bottom forming. In either case, we are still looking for that retracement, and especially now that the bounce limit is being tested, we're looking for that retracement sooner rather than later. And when that retracement or that test is done, we are going to be looking again for, that's another candidate for a low. It's the best candidate that the pattern has now that it's in play. This prior fade, that wasn't necessarily a candidate for a low, it was a candidate for a bounce. And buyers still would have had to perform to a certain extent, maybe to a higher degree or a lower degree, depending on what the price action, what patterns might have developed along the way. But in this case, there really isn't much choice. This is either a bottom on the retest of this low, or it is the beginning of a much, much bigger and more protracted decline. This is so close, still so close to its consolidation at the highs. That's very much a possibility. That as far removed as this is from the actual high of that range is irrelevant compared to the freshness of the perception that the lows are breaking. It's not just a function of measuring this or beginning this from the recent high or from the overall highs. This may just be one big correction back into the range before getting on with a much more substantial downleg. So this is a much more significant low if it's tested, as far as being an opportunity to bottom. In this case, more of a requirement. So right now, the focus is on the bounce. It did get there. It didn't need to get there before testing 48.2, 48.6. It would have been preferable for the bottoming to have occurred from a shallower bounce. It's not. Still capable of that, and not too unusual for that to develop, but it'll still be a question mark. There is an alternative. There is a bullish alternative to recover this bounce limit, to stretch out the bounce. There's still greater thresholds to be recovered to actually indicate that this leg is done, that this multi-month range is being recovered, that it's even capable of extending higher to higher highs, let alone being done with this leg, that being a false break. This isn't it. It's going to need to be a bigger bounce taking out the bounce limit. But meanwhile, as far as a fade goes, if looking at this to sell, to short, to be exposed, if this were to extend any higher than the bounce limit, be very, very cautious with that, because if in fact this intends to extend higher, if the bounce limit / retest of the low is not playing out, and instead this is extending the bounce, this gets, it almost literally explodes higher at this stage. The alternative to holding this bounce is that this is coiling and it's about to explode higher. So in that regard, there's a prior high, or the high to first testing that that support, which aligned with some of this Fibonacci stuff on the downside, comes out to about 59.7, just a little bit of a buffer, 59.8. Anything above that, I mean, I'd rather be flat than short at or above 59.8. Just the approach. If this isn't being so impatient as to already be reacting down, be careful. You can always re-enter short, but if this is what I would think it is, if this is ignoring the bounce limit and just extending further, it could track this slope. This could be the leg. It would be that vulnerable because of this coiling to just almost literally exploding higher. So either form a better bottom on a reversal down from this bounce limit, explode higher through it, or actually react down to the lows and keep going. Any questions about any of that, let me know. This afternoon, if there's any other coins to look at, let's look at those two. Reasonable bounce on Ethereum. I'm not really looking at them for any clues to the other. Solana continues its performance, just nothing predictive though. All right, currencies, yen at a really maximum pullback. I don't need to see gaps, opening gaps, not closing gaps, opening gaps filled. They're typically going to be a requirement to fill that gap above all prior highs in pretty much any other market. Not so much, or not necessarily so much in currencies, but it's generally an attraction anyway. This would be the sweet spot of support if that were going to develop. Right, expect that. Having pulled back. Euro, no requirement to retest its highs, even its gap up, but it's an attraction so long as sellers haven't gained traction to the downside. The pound is really overdone. This was my next lower candidate for a reversal. Unless this turns into an island, which it's trying to, but not really a big bottom fixture here. It is interesting. We do have a triangle, a symmetrical triangle, kind of. Got to be a little generous in ignoring some overlap. Symmetrical triangle often breaks falsely in one direction, reverses more substantially in the opposite direction. Aussie got way overdone to the downside. Gold firmer. If we were just looking at gold in a vacuum, I'd be much more confident in this being a temporary pullback, which it still could be. It may be that. I would just like to see silver playing along. Silver has had some unfinished business below that it had to neutralize, and it has. That was this gap under all prior lows. Now it is this gap under all prior lows. That's neutralized. And then there's overnight lows, lower lows that had printed. They don't have to be retested intraday. It's just helpful. Until there's some more absorbed shorts or cumulative behavior, I've got to see a bigger recovery above at least 28. But this being a multi-session range now, start probing lower and recovering through the close, or don't confirm with a second consecutive lower close, and we could have a much lower inflection back up. Long bond continues its pullback. Interesting how the uptrending support interacts with the chart when it includes overnight or not. But its gap above all prior highs, that does require being filled, and filled intraday. preferably. It was created by a flight to safety with the market falling apart, stock market falling apart. Stock market not falling apart isn't actually helping with the retest of the high. I don't think the market needs to fall apart to trigger that retest. In fact, historically, if that retest is triggered by the same catalyst as a flight to safety, I'd assume that it's not neutralizing that attraction, but on its way to even higher highs. And crude oil bouncing. I don't have any requirement for anything lower. We had an unfinished business at 72.73 that was neutralized and has held. It's really just a landmark. There's room for noise around it, below it, and above it. So this bounce overnight to 74.50 isn't necessarily reversing the trend up. I haven't lowered my buy signal. My buy signal is still up here at 75.50, 75.35 at least. But that's it as far as ES, coming back a little bit further. Now, touching again, just overnight, but touching Friday's lower or higher prior lows, the underbelly of Friday's range. So some natural resistance in there. I'll probably be deleting these Fibonacci overlays shortly. But meet back here at 9:15. Good luck today. All right, good morning and welcome. It's Wednesday. It's time for Strategy Planner. If somehow price were retested the actual spike low that tested 51, its low at, call it 77, 5400 handle starts coming into view. Let's start with Bitcoin. So my bounce objective, which had originally been an opportunity for the chart to have, it was basically an All right, good morning again. So as we come into the open, we're basically hovering where we were during Strategy Planner, which is just a little pessimistically short of yesterday's high. Yesterday's high that responded with an 80-point plunge. So there is no change to being in proximity to that high, being likely to retest that high, the likelihood for retesting that high, then taking us further into Friday's range. There's really going to be a 15-minute window, the first 15 minutes through 9:45 to either maintain that or not, if it's even attempted during that window. Probing the overnight high, exiting the first 15 above the overnight high, that's bullish. At the same time, other inputs may or may not confirm, may contradict. The more we can get aligned in one direction, the likelier that outcome. So if yesterday's high is actually probed during the first 15 minutes, it had better maintain that recovery through 9:45, or else that's basically passively bearish. Similarly for any other higher prior low that might be touched. So it's still fluid, but those are the things that we'll be observing as we come into the open. We're going to keep an eye on the yen too, as that unwinds or not, or stops unwinding. I'm not sure anything interesting is going to happen to that intraday vis-a-vis U.S. stocks, unless the open is lapsing back under 14.11, which looks looks kind of close. It's a lot of points, but we're in an unusually wide range. I'm really just looking to buy weakness or buy a bounce off of enough weakness. We've got to actually start taking out 53.11 to suggest that this overnight rally is being rejected. Otherwise, dipping into that range, likelier to recover, or don't even dip, just come out of this pre-open consolidation, taking out overnight highs, attempting to, I think our trigger right here is 30.50, 30.75. Call it 30.75, 53.30.75 would really be the tightest long entry or trigger, upside trigger. Still needing to be probed by at least 4 ticks to start its countdown, and then whatever that 4-minute high would need to be exceeded. I'll adjust these as possible or necessary. Any questions, let me know. I'll be right back. All right, nothing really new on the opening bar. But quickly coming into resistance now. This is the 3075 inflection. 3075 has been pierced by just 3 ticks. So it's not actually doing, there you go, 4 ticks. Minimum 4 ticks during the first hour. 3 ticks any other time of day to start the countdown. 4 minutes during the first hour. 3 minutes any other time of day. Whatever the high is, that's a dynamic timing window. Not fixed like the timing windows that are labeled below the chart, but dynamic. The window opens upon certain price action. In this case, minimum 4 ticks, probing the inflection point. So as soon as the 4-minute high is identified, in other words, the usual attention span of weak-handed counter-trend sponsorship, we can identify where reinforcements would arrive. In other words, how much higher would represent reinforcements? Or is it just the usual attention span of weak-handed counter-trend sponsorship? So it's not just price, it's time or timing. So the high has been pierced, not a whole lot, but pierced anyway. As long as it's been touched. If at 9:45 all this buying pressure has been expended post-open just to achieve a touch, of course a probe would be more decisive, and yet at 9:45, that first 15 minutes lapses without exceeding the overnight high, whatever relevant level, in this case the overnight high, was touched, then we assume that sellers lacked that strength, didn't gain traction for the effort. That's not necessarily reversing momentum down. We do need a trigger for that. But there's uptrend basically overnight. The prevailing trend is up. Post-open sponsorship, strong-handed or weak-handed, we'll see. Depends what they can do by 9:45. What they try to do and can maintain. Sometimes it's more bullish not to try and fail than it is to try and fail. So having tested one end of this range, do we need to come out the other end to know whether that has failed? Not all the way. In fact, our sell signal is under 53.20. I'll leave note of these relevant levels. Certainly want to be made aware as they're being tested. But basically under 53.20 at this point, post-open, having already touched at least, if not pierced, preferably probed, but we didn't do that yet, the overnight high. Reacting down so steeply, deeply that is, would indicate that sellers were gaining traction. There's 3 stages to a reversal. 1 is the prevailing trend. 2 is the prevailing trend ending. And then the 3rd is its reversal. That interim step can't be missed. And this is kind of like Schrodinger's cat. We've got the makings of a reversal or of extending higher. We need to know at 9:45 which the market chose. Now, actionability is dependent on anyone's individual trading plan or style. as we get past the first third and then the first half of the first 15 minutes, and we're still probing or maintaining or exceeding the first 4-minute extreme, if it can fit in there, of the actual inflection, we can start giving buyers a bigger benefit of the doubt. Now there's a more decisive probe above the overnight high, and therefore, if not maintained, more significant rejection. Pullback limit is 33. Really just applying the same logic. If 33 is a pullback limit, if it were probed from above now, we'd start a 4-minute countdown. The usual attention span of weak-handed countertrend sponsorship. But the 4-minute high to testing our buy signal is being exceeded, so that's reinforcements. We expect reinforcements to behave like reinforcements, stronger handed. We already know there was just no bearish reason to have retraced to this degree. Behaviorally, it was patience, restrained optimism, not necessarily pessimism, stopping short of the overnight high or of yesterday's high, but in any case, potentially bullish from a contrarian perspective. Pullback limit is 38.50. Now, be aware, there's 43. Remember, the target for yesterday's rally, not just to retrace. First of all, our bias up target was 30. We weren't going to come that close to, or calculably the target. We weren't going to come that close to Friday's higher prior lows, just 2 points higher without touching them too. Touching that, and it was touched. And that wasn't satisfying buying pressure. It was just a landmark. It was likely to, if it were going to be tested, be probed to 42, 43, and it was only probed to 42. Here's 43. So still resistance. Still possible upon its test that it be rejected. I'm not anticipating that at the moment, but especially if we come out the first 15 minutes. Still probing. But 42 is now the pullback limit. Is that? No, I'm sorry, 41.50 the pullback limit. This may just be a retest of yesterday's high. So if you're looking for predictable, that's it. Exposure can be cut back or just flat. This isn't yet a sell. And if these first 15 minutes elapse above the overnight high, I'd give buyers that benefit of the doubt. Doesn't mean it's a straight shot higher. So pullback limit, just as the buy signal was allowed 4 minutes of being probed to establish whether that was just the usual attention span of weak-handed counter-trend sponsorship, or if it were going to be exceeded after those 4 minutes established a high, which is also, by the way, the patience of stronger-handed sellers, letting them have that room to hang themselves. Or were those buyers going to attract reinforcements? They've attracted reinforcements. Reinforcements behaved as reinforcements should, aggressively. And now they have their own worries, and that's this pullback limit. It's treated the same way as any other inflection. The buy signal is an inflection. The pullback limit, reaction limit, is an inflection. Probed from above allowed 4 minutes of counter-trend detouring. In this case, it's sellers who we're assuming are the weak-handed counter-trend sellers or sponsorship. They've established a 4-minute low. Anything lower is reinforcements. Anything lower violates the pullback limit. It could be much more substantial 4 minutes than this and still just be a combination of their weak-handed attention span and strong-handed patience by buyers. After that, though, 1 or 2 point buffer, room for noise, and it's just a retest of the overnight high. Of the overnight high and yesterday's high at this point. Still short of 945, the first 15. If we come out of the first 15 minutes having probed overnight high and yesterday's high, and at 945 reversing back under them, not bullish, passively bearish. The opening print being 27.75. Back under 27.75 as of 9:45. Again, having probed, I'm going to pad that a little at 27.50. Having probed from below 2 prior highs. At that point, not only absorbing those higher highs test, but attracting sponsorship to reverse down. So we've got a very definitive low to the 4 minutes and the 1 or 2 point buffer, room for noise, testing the pullback limit. That should be weak, if it is, weak-handed counter-trend sponsorship that should be held and produce a fresh high. Now, if the first 15 minutes lapses, the next bar is the first 15 minutes lapse. If it lapses overlapping this prior high that it's in the process of touching, then that's a non-event. We'd still take a little more credibly the probe of the overnight high and its recovery. Raising the sell signal to 29. If all this buying pressure coming out of the open ultimately doesn't gain traction for its efforts, or the traction that it's trying to gain is rejected, then things can unwind to the downside pretty quickly. This is not a spot for a mental stop. $9.45 bar ending, overlapping yesterday's high, but not rejecting it, and maintaining the recovery above the overnight high. We're not often going to get everything aligned in favor of one direction or the other, but we don't have anything contradicting what is aligned to the upside. So this is predictive of how the morning intends to play out, how the AM bias window, 10:15, 11:30 intends to play out. Higher, then this will probe more substantially back into Friday's range. Really the point being, we're going to fill the gap back to Friday's cash session close. The cash session close equates to 76.77. That is the next higher attraction. There's resistance along the way. There's higher prior lows. Some higher prior lows might not be a straight shot as resistance comes in around 52, 54. And by the way, now we have a higher pullback limit. We start the process again. 43 is the new pullback limit. 9:45 was a very relevant window. And now it's gone. Now we have other relevant windows. 10 o'clock, 10:30. Still important that all or the majority of those continue probing prior highs, or not, but if they do, that they lapse above those prior highs. New dynamic window just opened upon probing back under 43, 4 minutes. The usual attention span of weak-handed counter-trend sponsorship. Whatever they're able to produce in this window. It could be deeper than the last pullback limits test, the lower pullback limits test, and still be part of that 4 minutes and disqualified from triggering a reversal because it's just a pullback limit test. Looking out, just imagineering this, if we look out to the top of the hour and price is higher or later higher, I would imagine this will have formed a running correction. If we guess that that is currently trying to form, we can identify how deep of a pullback, forget about the 4 minutes, but calculably how deep of a pullback it should hold if tested, and that is basically 36.25. I don't want to see price under 36.25 for this running correction's sake. So if this high is being taken out, the reward, not necessarily in a straight line, and probably not, but the reward is next reward is to fill the gap back to Friday's cash session close, 53.76.77. So that's the reward. In a risk to reward equation, that's the reward component. The risk, where's our stop? Where would we know that its pullback is too deep to maintain the pattern? At this point, it's basically 36.25, 36.50, 10 points. 10 points to the potential for 30 points up. That's a 1 to 3 risk to reward. Now, before we get into whether or not anybody wants to hold a 10-point drawdown, does this first meet our or cross our threshold of the minimum requirement for trade selection? A 1 to 3 risk to reward shouldn't be or need to be that much more aggressive to qualify. So we don't have, at the moment, a new pullback limit. But the pullback limits test for 4 minutes was productive. It produced a fresh high. So we're actually repurposing the same pullback limit, 43. It's now being tested again for the first time. This prior low, just like the prior pullback limits low. Those are irrelevant right now during these first 4 minutes of testing the pullback limit, even though we've already tested it and established a fresh low. That's irrelevant since it already produced a fresh high. Often that'll produce a higher high that allows a new pullback limit to be calculated. And then it's not necessarily confusing, but this can be a little confusing because of the repurposing of the prior pullback limit. And it's now allowed more attention span. It doesn't mean anything. It doesn't make it any less potentially bullish. It doesn't speak poorly of buyers that they needed 2 pullback limit tests to get rid of sellers, weaker-handed sellers. It doesn't necessarily make it more bullish. So I would still consider this or describe this as still restrained optimism. It's certainly not pessimism, but still overlapping yesterday's high, eking higher, not rejecting it. From a contrarian perspective, that can come back pretty bullishly. We could get a universal awareness phase out of this. A timing window that just trends straight up. So there's Friday's higher prior lows being retested. Certainly want to be aware, even if we knew with 100% certainty Friday's higher prior lows are going to give way. Nothing requires that it be on this attempt. And this happens, the pattern happens to be at the moment so far that this is not a healthy area. It can be really healthy to break through it. We'll see if that happens here or next time, if at all. All right, so we do have a minimum 4-tick, 4-minute low. We were able to start the countdown. 3 ticks, 3 minutes. Any other time of day, 3 ticks to start the 3-minute countdown. 4 ticks to start the 4-minute countdown during the first hour. Cheat sheet over here on the left. 1 or 2 point buffer room for noise. And we're no longer testing the pullback limit, but violating it. If we didn't have other bullish inputs like having exceeded the overnight high through the first 15 minutes, or at least to be overlapping yesterday's high, not probing it and reversing back under it, let alone back under the 2775 opening print, I'd be aggressive on a sell signal. I'd be placing the sell signal around 38. About 1 or 2 points under the pullback limits test. Giving buyers more room in this construct. I may raise it now to 38, but that's because they've created more, buyers have created more room. Pullback limit is 45. Now we have a fresh pullback limit. It can be probed for 4 minutes to whatever degree. The same bars probing a buy signal's pullback limit are disqualified from triggering a sell signal. Can't be doing both at the same time. Testing a buy signal's pullback limit and triggering a sell signal. It's just a part of the system to help stay out of trouble, overtrade, overthink. So we're allowed to create a new 4-minute low to whatever degree. It could overlap prior 4-minute lows and still be capable of recovering, and often does. 3-minute RSI is overbought. 1-minute RSI on the cusp at the prior high, diverging negatively compared to that cusp. And resolving that test. It's been pretty relentless. It was a relentless overnight rally. This pullback is confined within higher highs, higher lows. It persisted into the open. The first 15 minutes extended higher. I don't have the card up here. I'll put the card up just to point out this is a setup. The relentless overnight rally that tends to influence the morning. So pullback limit is 53.50. Wash, rinse, repeat. All right, it's actually 52.75. So kind of a running correction. It's not really a running correction. There's just too much overlap, too much congestion here. But I still wouldn't want to see a break under its lower quadrant, which is about 36. It's pretty widely known. Don't trade the open. Don't trade the first 15 minutes. Some say don't trade the first hour because a lot of whipsaw there. That's why I devised several different indicators that would exploit that initial noise in some cases. Pullback limit is 55.50. hate to leave stuff on the table. Like the relentless overnight, or first 15 lapsing above overnight or beyond an overnight extreme, etc. Right now, I'd look at resistance. There's definitely resistance up here at 58 on our trek to what we are now assuming is in play, 76, 77. But a pullback, definitely a possibility. Can always re-enter long if you consider scaling back on a larger position. If you're just trading one unit of whatever it is, you have to take your opportunities. You don't have the luxury of reducing exposure. But either tighten or lighten exposure, tighten stops into this 58, into this pattern that has surged into maybe not running correction per se, too much overlap really, too much congestion, but still running correction like, and also exited aggressively. So entered and exited aggressively with a compact series of higher highs and higher lows. That often gives way, those three stages often give way to a stage 4 of a plateau. And that plateau often gives way to a stage 5 of retracing the lower quadrant of that running correction pattern. Again, I'm not convinced this is a running correction. It's just not optimal. But just wouldn't be surprised to see it behave in that way anyway. But that's a pretty important resistance. And there really hasn't been, throughout this entire first half hour, any appreciable pullback. Consolidation, hesitation, but no actual retracement. It doesn't have to be, ever. And yet the market figures out a way to fit it in there. If we look back at Friday's pattern, at its higher prior lows, you can see we're actually, of its 3 intraday lows, now testing its third from below in one session, one window. So, not that it has to hold, it's just historically difficult to make it through there under these conditions. So remember what I said about pullback limit. Pullback limit, first 4 minutes, the usual attention span of weak-handed counter-trend sponsorship. This substantial drop is no different than this shallow drop. It's the same thing. It's 4 minutes. Look at it in terms of time, not price. I mean, you have to, but still, to understand the concept, it's the usual attention span of weak-handed counter-trend sponsorship. There's different sellers up here than down here. And, by the way, buyers, too. Buyers are being patient. They're going to be more patient up here. They're not in a rush to chase it much more higher. Often they're not even in a rush to chase it this high. But we're still establishing 4 minutes. Let's say this is the 4-minute low. At 41, 1 or 2 points buffer, room for noise. I'm going to add a little bit buffer to that. That's normally what we'd go with, but let's add a point here. Under 38, I'll start giving sellers every benefit of the doubt that they have absorbed this rally. Short of any higher productivity, at least near term. Maybe whipsawed out of it, but that's where I would do that. And I'm not even wild about taking a sell signal this far removed from the recent high. And by the way, I'm really not even thinking it's going to do that because the usual attention span of weak-handed counter-trend sponsorship is 4 minutes. That doesn't mean that the bounce automatically resumes at the end of those 4 minutes. If we were close to this 4-minute low at the end of that 4-minute window, it might be a really attractive buy. Not because it's any likelier to recover, just because it's that much closer to where we'd know it's wrong to be long. The risk would be so limited. If we could just take very limited risk entries all day long, how great does the underlying analysis have to be? If we can just take minimum stops and then throw in that the analysis is pretty great or that the analysis is reasonable. Overall, we're usually going to see that high retested. Overall, the bigger picture I've been describing, looking for 77, is going to get back on track. Why wouldn't we want to buy the 4-minute low? The trade-off in that risk when it's so close to where we'd know it's wrong to be long versus the outstanding upside, just to be able to arbitrage the two against each other. Do that all day long, every time it drops. Now this might be a big enough shock to the system that it needs a little bit more cooling down period. Another dip. Maybe back to the low or lower. And finally, I wouldn't have wanted to take that sell signal immediately because it was the first reaction down. That leg was the first reaction down from the previous trend's extreme. That actually has a horrible track record of triggering a reversal. Much, much more often, close to always, we're going to see that first reaction down from the previous trend's extreme retrace at least 61.8% of the way. It doesn't have to retest the high for the next down leg to be distinguished from its first reaction. 61.8% is reasonable. There's a 61.8% reaction, retracement. Now another down leg from here would be much more credible for triggering a reversal. It would be separate from the first reaction down from the previous trend's extreme. We can distinguish it, not arbitrarily, but literally mathematically. Numerically, mathematically? Anyway. So 1 or 2 points buffer, room for noise. Look how substantial that pullback is. That's still the same thing as this modest pullback here or here. 4 minutes, the usual attention span of weak candid counter trend sponsorship. Patient, strong hands. Any lower and sellers would have attracted reinforcements. Buyers no longer defending. Next, whatever, lower support, distribution pattern, whatever it is it's being triggered would be in play. All right, so we're coming into the end of the, we're coming into the bias window, the 10-15 bias window. You can see the fixed windows below. Pretty substantial movement here. I'm willing to take a sell signal knowing it's just a temporary correction. Triggered under 43. Certainly vulnerable to whipsaw. In all likelihood, temporary to whatever depth or degree. Not necessarily, but for our purposes here. And it may be whipsawed right back out. So I'll have a buy signal identified depending on how deeply the inflection were probed first. And optimally, this is the current pullback legs low. So we don't know if stronger handed sellers are taking control or if this is just noise. The first 4 minutes probing under this inflection are going to be staking out what could just be the usual attention span of weak-handed counter-trend sponsorship. All 4 minutes don't have to be in decline. But 4 minutes since first probing this by at least 4 ticks to start the countdown is disqualified from triggering a buy signal. The bounce limit, by the way, is 38. Similar inflection, it gets 4 minutes, or after the first hour, 3 minutes of counter trend sponsorship before suspecting that it's actually strong hands reversing. Bounce limit is 34. So again, we don't know if this is just a temporary pullback. If you're just scalping it or want to scalp this, not a bad idea. We know there's something relevant about this support right here at 30.75. It was an inflection on the way up. Overnight highs, lower prior highs now being tested as support. This late. Might not be too easy to just break right back through. Even if we knew with 100% certainty that this is going to resolve down, doesn't mean this leg does it. So the same bars testing the sell signal's bounce limit are disqualified from triggering a buy signal. So I'm not lowering the buy signal until I have a good idea where the 4 minute high is going to be, or 3 minute high as we get through the first hour. If you're in the YouTube simulcast, any questions about this, let me know, and I'll address it. Give you an idea if you need tips, insights, how do people execute on this. What are some of the things that we're looking at, maybe that I'm not actually addressing for brevity's sake or focus? Is it making sense as is? Getting any good trades out of this? Able to exploit any of the levels being shown or the discussion? We've really passed the stage of testing our software, which was the whole point to opening this room this morning. The simulcast, we're not really doing an official promotion. If there's nobody actually utilizing this, we can just close it. If you're utilizing it and want to leave it open for the morning, let me know that. If nobody says anything, we'll just shut it down, no problem. By the way, here's basically the 3 or 4 minute high to testing the bounce limit. Again, the usual attention span of weak-handed counter-trend sponsorship. If that 3 or 4 minute high is exceeded, higher than its first, or beyond its 1 or 2 point buffer room for noise, then we'll just assume that that was a temporary pullback, which on a higher level, as I've been discussing, is what we're assuming. Keeping the door open and describing what it would look like if this were instead reversing. So this is the 4-minute high. There's two choices here. One choice is we've got a sell signal. Its bounce limit is being tested to its maximum if this is just weak-handed bouncing or a counter-trend sponsorship. So close to where we know it's wrong to be short. It's a pretty attractive short, pretty attractively priced. Not because it's any likelier to play out to the downside, just because of how close it is to the stop. Or let's call it a stop and reversed along. Now that we know where the 4-minute high is, I can actually lower the buy signal. To 45.75. Four-point stop. Are we looking for, if you're basing your trade selection on a 1 to 3 risk to reward, or are we looking for a 12-point profit off of 41? We're really removed from that now, but it's not the same profile as it was a few moments ago. Moments, not minutes. But we don't have to take what's in front of us. Limit orders available. Doesn't mean it'll be filled. What it would mean is we'd have to wait for the next opportunity, which there are plenty throughout the day. But if that's your strategy, just keep taking those setups when they appear and their stops, and if also part of that, reverse to the other direction. Now in this case, the reversal is pretty substantial, but it hasn't produced a fresh low. It's a 61.8 retracement back to the low. What do we know about that first reaction up off the previous trend's extreme? It has a horrible track record of reversing, of triggering a reversal. Well, now it's been corrected by 61.8%. Now a bounce would be distinguished from that first reaction up and would have a greater likelihood, more credibility for triggering a reversal. Let me get this out of the way. I don't like to adjust any of the annotations. I like leaving them where they were when they were touched, unless they get in the way. We never change their levels. So this could even be a deeper corrective dip. And I am going to lower the buy signal. Right now I'm going to lower it to 43, but I could see lowering it substantially more. Not even for price dropping, just for time passing. Question, do I think tactics and timing are similar on stocks or only futures? Similar, yeah, absolutely. As far as on stocks, it depends on what you're doing. Are you literally day trading, scalping? Then, yeah, very similar. The 3x3 or 4x4 that I've got labeled here might be a little aggressive for stocks, but there are, depending, I need to know more about what the time frame is. Still similar. So we've established a position of strength through all the foregoing, exceeding the overnight high, etc. We're assuming this is just a corrective dip. Bounce limit is 29. Now, is this the first, if this were to bounce from here, is this the first reaction from the previous trend's extreme and disqualified from triggering a buy signal? No, it's a retest of this prior low. It's still overlapping that. So we could get as aggressive as we want on a buy signal. I would still want to see the 3-minute high to testing the bounce limit right out of the first hour. So 3 minutes, 3 ticks by 3 minutes. I've got other tricks, tactics, techniques. What's the 61.8 retracement of this last bounce from its absolute low to high? $38. Get rid of those errant ticks. $39. Right now I'm going to be a little less aggressive. $39.25. I'll lower the buy signal just through the passage of time if price just continues overlapping the prior low that it's retesting right now. Next, lower the buy signal to 38. So as far as day trading, yeah, and as a subscriber, I would work with you to establish whatever levels. This is market timing. This is telling you when the market as a whole is leaning one direction or the other. Question, everyone who sold the last 2 hours is trapped. Oh, okay, yeah. Well, they're trapped or they're already done. I mean, they may be that contingent that were sellers and held overnight and didn't cover on the way up, probably covered post-open. Or they're not going to, or even if they're still trapped and struggling to get out, they're not sizable enough to be influencing price at this point. We just pray for their souls and move on. So, there's also the possibility that the balance of the morning now, the AM window, just ranges sideways. All the action, all the fun stuff being done for now. Now, notice this is overlapping yesterday's highs, overlapping Friday's higher prior lows. This is the closest we're going to get in the market to a rock and a hard place. I forget which is which, but one of them is a rock and the other is a hard place. Now, bigger picture, as I've described, I'm still looking for, since we've bothered to retrace all this and relevant timing windows did relevant things, next higher reward for buyers that absorbed this wasn't just a higher print, but to back to the origin of this down leg, which is Friday's cash session close, 76.77. It's not a requirement. So left outstanding, it's not unfinished business. And if we exit the bias window breaking lower to a specific degree that I'll identify, but breaking lower instead of hovering, let alone extending, then that'll be suspicious as far as the upside. Even if we knew with 100% certainty we're going to recover, it doesn't prevent a deeper dip first. All right, bounce limits, 3-minute high. Get a little bit of a retracement here, and I'll lower the buy signal to 38. Willing to get whipsawed out of longs since that more and more aggressive longs, since that is the expectation, the bigger picture look. But I'm not just going to buy weakness because of that likelier resolution. All right, any questions, please ask. I'm going to get this written up in the blog. Parameters should be clear, but if they're not, let me know, and I will elaborate. Right now, that's all I know, what the likelihoods and possibilities are, or the possibilities and the likelihoods of those possibilities. But I do like the bigger picture outlook, just to continue stretching the rubber band. I'd like to make sure, though, keep in mind, this is a correction. We have unfinished business below. Sunday night's low, because it's a Globex trend extreme, requires intraday retest. Now that we've retested Friday's higher prior low, Monday's gap under all prior lows requires being filled from above. No particular timing to either, and it's not... there's no greater urgency just because there's multiple unfinished business below. You'd think, but there's not. And by the way, filling the gap back to 76, 77, gap fills often come in pairs. And just by filling that gap, all of a sudden, Thursday's gap, 54.81, not 53.76, 54.81 becomes likelier next. Not a requirement, but still something to be aware of, the usual behavior. And alternatively, this retest of yesterday's high, holding a test of Friday's higher prior lows again, may be retraced to such a degree today, this morning, coming out of the bias window, that all that upside is delayed, if even played out. Yesterday's cash session close was 64.75. 52.64.75. These are ballpark. Today's open was 27.75. Or these are going to be off by a few ticks. But this is the 61.8% retracement between yesterday's cash session close and today's opening print that created the gap. This is a proxy for that gap. Gap fills back to closes aren't required. Gap fills back to opens are. intraday, by the way, once activated. The gap fill back to a close, even though the actual gap fill is not required, usually its proxy will be filled at some point. And not as much a requirement. But if we start getting back into the orbit of the proxy, 5288.89, that had better hold. If it's even tested and tested on simultaneously 1 minute and 3 minute RSIs oversold, that becomes a signal that the actual gap is going to be filled. So test 5289.88 with 1 minute and 3 minute RSIs simultaneously oversold. Putting into play next, not with another detour, but next. The gap fill back to yesterday's close, that upside really goes away. That's really the one thing significantly that would undermine whatever's going on here this morning resolving up. All right, let me get that in the blog. And any questions, please ask. Be right back. Soap, wash, rinse, repeat. We're not assured of this resuming the rally, but we can raise the pullback limit. Pullback limit is 49.25. This could just be part of the same sideways ranging through the morning, or it could be resuming the rally. But it sure goes a long way to avoiding the bearish scenario that I had described. Not that time isn't still available to actually form the bearish scenario, but that would have been to have extended down, if not all the way, at least attacking the proxy gap. It doesn't have to ever be tested. I mean, it does because of some other stuff that'll make it be overlapped, but not this morning. All right, could be a little flag here forming. Nice measurements. Doesn't have to be, but if we can picture how this might resolve, then we can picture what might interrupt it or reject it and defend against that. So again, as far as the YouTube simulcast, I know the latency, there's always a latency issue. It's much better to be in the vidiROOM itself. The vidiROOM has, I'm looking at the timestamp on the chart itself. You can see it in the lower right corner. Wow, is that a 3-minute lag? That is amazing. It's not even a second when you are live. If there's interest in that, here I'm going to actually post a link if you want to join it. You can go to the site and you can go to viditrade.com. And go to pricing. And you can join right now and get a free week. And if you don't cancel by the end of the free week, then it rolls over into a subscription that gives you the vidiROOM portion for free for the first term. That's a $200 savings. And if you miss it, if you need an extra day or two, just let me know. It's no big deal. If you want, if you know you want it, here's a link to a special offer. This is no free trial, but you get the first 3 terms. You get the vidiROOM for free. That's a $600 savings. So it's a trade-off. Worth it. But you get the exactly what you just saw. It's not as active all day long, but it gets active, and we get setups, and I constantly describe. It's a learning trading environment. So you come to understand what the influences are. We talk about different ways to different tactical choices to make. There's also a blog, an underlying blog, where all of this is described and mailed out several times a day. There's preset times that the blog is updated and sent to you automatically. Or you can go to the blog and search around. There's a big database, knowledge base of all of my setups and a lot of historicals when they've developed before. Just getting ready to do a big update to that with about a year. I think we've uncovered 2 or more years of other instances, just so you can see what the setup is. I showed you earlier, the relentless overnight trending, or exiting the first 15 minutes beyond the overnight extreme, or other setups that can be predictive, and you can look at the historicals and when they've occurred before and see analogs or differences to help guide your decision making. But I offer some pretty precise stuff to help guide your decision making. The live call at 58, 53, 58, did that look like a high based on everything? The kind of price action we were looking for? The dips that could be bought on the way? So again, if I don't hear from anyone, then we can just shut down the simulcast. If you have some questions, or if you'd like it to remain open through the noon hour, let me know, and I'll arrange for that. If you want to get rid of the latency, I suggest subscribing, at least for the free trial. Or if you think it's something you want to try, you can cancel anytime. But commit to the first month and you'll get the vidiROOM free for the first 3 terms, every term for the first 3 terms. But whichever. Thanks everyone for joining here. I mean, I see a lot of people logged in, but if there's no interactivity, then maybe you're just not looking at it or left it open by mistake. Been there. All right, any questions, let me know. If there's any stocks to review, let me know. Palantir, of course, we had that Monday morning buy. Way overdone ahead of earnings. Yeah, Shopify just came out this morning. Big reaction, huge. On the way down, it missed an opportunity to recover, which would have been above 61, call it 61.50 at least, or 63.55, and we're gapping up through both today. Nice support down here. Now, islands in the market are made to be retested. Very often they're going to be retested in individual equities as well. Pullback limit is 53.50.50. Never got these buys. I think that I think we can rely on this previous signal that wasn't triggered. If it were triggered today, it's meanwhile resistance. That's back up to 68.50. Get through 68.50. I don't need to see 72.25 recovered. It would be helpful confirmation, but that would that doesn't need to be covered to already suspect or expect that the bottom is in. If this island were developing without also doing anything constructive to a low, then it's filling a gap back here, holding downtrending pivotal resistance or support. Resistance now support. Then I'd want to see it retested, but I don't need that retest. At the very least, 61.25, 63.50 needs to hold as support. So long as that holds its support, this island is history. All right. Robinhood comes out after the close. Huge repricing. A lot of it on Bitcoin, which I think as far as a story is done. Big double top here. Double tops made to be retested. Doesn't have to be, but it's clearly run its course. Heavily discounted. That is discounted into price. Just nice intraday behavior. So it's not going to recover enough in time to have any greater degree of confidence of a favorable reaction to earnings. But at the very least, we'll be looking at it post-earnings. Any others, let me know. Be right back. Yeah, SMCI had earnings. Why isn't it on here? It was on the blog. So not necessarily a knife catch. It is retesting prior intraday low. Here's all these opportunities it had to launch a rally that it didn't, never did, never tried. So those aren't failed. They're not. Those aren't trapped longs. But it is a fresh low. So we definitely need some degree of confidence that the prior low, while it's being retested, disqualifies this from a knife catch. At least the proxy gap. This is going to be ballpark. So these are inverted. This is actually the 38.2 at 566. So at least 566, but 587 is going to be the nearest signal that momentum is reversing up. Disney long entry. And let me just address this real quickly. There's a fresh high, 3 minutes usual attention span, weak candle counter trend sponsorship. Sure looks like this is reacting to something, not organic, but headline or some other input. But in any case, that's the 3 minute low down to 41. We're within view of the bias window lapsing. So we definitely want to see this just hold. Backing off too far here, under 38, would start to suggest that this was just a corrective bounce. That flag that was trying to develop didn't. Double top on this bounce may have. And even if it's eventually going to be recovered, initially there's a detour underway if it dips too deeply, in this case under 38. And if 38 were probed, I would start looking at for a buy signal in case it were isolated. So huge paradigm shift on Disney. Just gapping down, confirming. This is a significant low. Lots of stuff going on here. Lower prior highs being tested, prior lows. being attacked. But its counterpart, the relevant level, that all the singular numerical representation of all of that is 8763. Its counterpart is 93. So above 93 would target 107, 109. Maybe that's all, maybe initially. And PayPal, nothing new. Really liked, of course, the earnings reaction, second consecutive quarter of a favorable reaction to earnings. I don't know that this would have pulled back if not for the broader market this time, but it filled the gap. We looked at it Monday morning as a buy. Continues to behave. Next opportunity for a degree of confidence is a close above 64.75. Pretty deep pullback here on the ES. 3 minutes. 1 or 2 point buffer, or minute even. Room for noise. So just to identify, though, how much of a recovery would be enough. I mean, we're still in the pullback limit test, but let's just identify that back above 48 probably doesn't happen unless this dip is done. All right. Thank you. I see a trial and I see an actual subscription being opened. Terrific. You both get the same. You're probably not even in here anymore, but you'll both get the same. Both of those deals get the same access. If there's anyone else, let me know. I will leave this room open a little bit longer into the noon hour. If anybody wants it open beyond that, like through the noon hour, let me know. Meanwhile, again, thanks for letting me know how the test went. Right, now 48 is an actual buy signal. It no longer would represent that the pullback was done. Now there's actually a sell signal being tested. 3 minutes, minimum 3 ticks, 3 minutes countdown. Just holding up here is bullish though, so long as the bias window that starts lapsing at 11:30, and we're now within view of it lapsing 10 or 15 minutes earlier, it finishes lapsing at noon, so long as all of those windows elapse without reversing down, we'll have every degree of confidence that this extends, and maybe or even probably today. Doesn't mean there won't be a path down, just makes it more difficult on sellers. So again, this reaction down, 48 no longer resumes the rally or the signal. It now is its own signal, and I'll lower that as possible since we're testing a sell signal. And this may be productive pretty quickly, but so long as we're within view of the bias window lapsing at 11:30, it starts lapsing at 11:30, it finishes lapsing at noon. So long as any and all of those windows hold up, then we'll assume that this is a position of strength and that bigger, higher path is being developed. this is just a detour. Even then, there is a path down, but we'll give buyers the benefit of the doubt meanwhile. So the bias window lapse finishes at noon. By the time we get into the noon hour, if sellers are gaining traction under relevant levels that we described earlier, then that'll be it. There was an opportunity for this to be constructive to breaking through, chipping away at yesterday's highs instead of just retesting. There's still room. I mean, one of those relevant supports is the proxy gap. We're just now attacking it. This is a relevant support. Recall from this morning, 53.14 being tested. Down to 13, and so its bounce limit is 18, and actually this 20 wasn't really tested. So 53.18 is the bounce limit in play right now. So as I said, there was a gap down. There's a path down. There's always a path down. This is the beginning of that. This isn't necessarily it. I'm going to get aggressive on a buy signal as soon as we know where the 3-minute high is. A little bit of margin, maybe not 1 or 2 points, but whatever the nearest resistance is. There's no requirement to trend down. This is still in the realm of the opens range. You can see it overlapping. So it's still part of this whole construct. It's a very aggressive dip, but it's not necessarily a break. Right now I'm lowering the buy signal to 28.50. And I would expect this to be immediately and incredibly productive. There's just nothing bullish about sitting down here for any length of time. If the earlier price action that was otherwise just hesitating before extending higher, really consolidating this overnight rally, let alone the post-open follow-through. That's why 58 was the candidate for being the peak as part of a consolidation pattern. If that's still in play, then this is just either reacting to something that the market at a higher level than what we're looking at on the screens was impacting the market, or just organically we weren't attracting, the market wasn't attracting stronger handed buyers here, so it had to reprice and find stronger handed buyers below to sponsor the next up leg. Stalled trend pattern. That's a thing. But there's no reason then, having stretched the rubber band, not to snap back up, and also not to snap back up into noon. We're already missing the opportunity for a trending session to have greeted the noon hour at its trend extreme. That would have entrenched the upside. That's not happening here. This is the wrong extreme. It's not in the trend's direction, so it's irrelevant. Here's a quick look at Bitcoin, by the way. So right into resistance, the bounce limit, and now likely to, or vulnerable to resuming the decline, or at least to retesting the low to a fresh low, 48.2 to 48.6. That's the likely path. If that's already begun, that'd be interesting to see the crypto and ES risk off simultaneously in tandem. All right, I'm going to get the bias parameters up in a moment, and then I'll update them on the chart. They were really unnecessary today. I mean, they were useful overnight, but no interaction intraday as there often would be. Another overnight influential set of parameters. So there's the 3-minute high to testing the bounce limit. If you want to be short, that's where you short it. Here, 1 or 2 point buffer, room for noise, 25 to 27. Usual attention span of weak-handed counter trend sponsorship. correcting before breaking lower again. Short here with a stop and reversed along above 28.50. All right, bias parameters are now available on the blog. I should get the email alert sent to you momentarily, and I am going to update them on the chart now. And that's why the strategy of taking every one of these setups, whatever the path, you can always reverse to long instead of patiently waiting for the long. But if you can take a trade that is priced right, kind of like sitting at the poker table, sometimes you have to call. No matter how confident the other guy looks. Bounce limit is 975, 5309.75. And now 5308. So this changes the analysis, of course. There was the opportunity that yesterday's highs being chipped away at were going to be broken on a timely basis. They can be tested all morning long. What matters is the timing window lapse. That's the isolation. False break. False break is such a useless term unless it has its vector of timing as well. Bounce limit is 5305. And this may turn out to be a false break, but the burden of proof is on buyers to reestablish that. They had every opportunity here, but when it mattered, it was all conjecture, all based on maintaining, if not extending. All they had to do, all buyers had to do was maintain. When it mattered, they didn't maintain. Already testing the bias down signal, which is support. Last night's or this morning's bias up target, which is support, resistance from below, support from above. I'm going to leave the YouTube simulcast open. I really did not intend to do a promotion today. We were just testing the software, the change that we made recently, before doing a promotion. And I'm glad I threw these links out. Thank you very much. Anyone else who wants to take advantage of the special offer or just come on over with the free trial, definitely feel free. You know, this is the kind of thing where if you don't have the actual access to the vidiROOM, if you're not in the vidiROOM and you're just in the YouTube simulcast, there's a latency. Like right now, I'm showing 3 minutes. Is that right? If somebody could verify that for me? I mean, I'm seeing it on a test account that we have in the office, but if there's if I'm wrong about that, but I'm seeing a 3-minute latency. I don't know how that's very useful, but in the vidiROOM itself, it's a matter of seconds, or at most ever when it's even lagging. But there's a couple links in the chat if you... Oh, that's good. Okay. I wonder why this... It could be the machine that it's on. The test account. That's good to know, too. So... Another 3-minute high to testing a bounce limit. Usual attention span of weak handed counter trend sponsorship. It doesn't matter if we're sitting there at the high of the 3 minutes, the strategy says take it. Short it. Stop 1 or 2 points higher. I'm not going to have a buy signal right here just because this is now a new extreme. The first reaction off the previous extreme has a horrible track record of triggering a reversal. But here, for instance, 3 minutes out was still sitting at its high. What if it weren't? You could just put a limit order in. If it gets hit, look, it got hit. Or not. But even if I had the highest degree, it's never going to be 100%, the highest degree of confidence that this is a bottom, that this is forming a low and going to rally. Still, if your strategy is to take the 3x3s, 3 minutes testing the bounce limit, instead of overthinking it, but also don't overthink it by having a mental stop, have a resting stop. When the drop doesn't resume, it can almost literally explode higher. What we want to see before taking a buy signal is at least a 61.8% retracement back to the low, whether it's back to the actual low or get rid of the sentiment extreme. So 53.06, that would distinguish the next up leg from this. And maybe this is just going to resume the decline. But even if we knew this was just the usual attention span of weak handed counter trend sponsorship, even if we knew it wasn't, there's usually going to be a retracement, and a stop can be adjusted so that even when it turns out to be wrong, it's still manageable. It's even a less loss and sometimes break even to profitable nominally, not the reason for showing up, but still as opposed to the loss. There's a 3-minute high. I'm going to call that a correction. It's not. It's close. It's the noon hour. Give noise a little bit of credibility. And maybe it's whipsawed out, but here's a buy signal to be triggered about 53.14. 3-minute high, 1 or 2 points buffer, room for noise, sitting right there. It could get cheaper, but it doesn't get cheaper than this. 53.12 to me is equivalent to 53.14. It is the 3-minute high with an additional 1 or 2 points buffer, room for noise. If you're going to follow the strategy, this is where you sell it. Now, it would be the same pattern as just developed on the way down. The alternation rule suggests that doesn't happen. So that's kind of undermining its potential. It's not a requirement. It's just a usual behavior. Now we're all about the buy. 3 ticks minimum, probing above the inflection, starting a 3-minute countdown. During that window, sell signal is disqualified from triggering. 3 minutes of counter trend detouring is available. And if this is the false break, after spending allowed for 3 minutes of counter trend detouring, at that point back under 53.08, or maybe it'll be lower. Maybe those 3 minutes will have used up too much room. Remember, the whole point of the system is to stay out of trouble. $53.08 is sort of a preliminary, telling us 53.05's inflection likely to be tested. Once we know where the detouring is done, I might be able to make 53.08 the sell signal, not needing to be preliminary. So we've got a 3-minute high and we have a 3-minute low, all fluctuation around the buy signal. Anything lower is violating the buy signal or no longer testing it. Anything higher is reinforcements to the buy signal. 1 or 2 point buffer, room for noise either way. And then some. I'd look at 5308 as a sell. Again, anything in this stage of the pattern, let alone, and more so the timing window, the noon hour, vulnerable to noise. But this is where I'd give that a benefit of the doubt. And if 5308 were probed and whipsawed back up, that itself may give us more confidence in a buy signal. All right, any questions or comments about any of this? If you're a subscriber, of course, you're able to request chart analysis. I think you saw me responding to some stock chart requests. Just instant analysis. Questions being where to get long, etc. But any questions about the tactics or the levels or the analysis, why this or that? Always free to ask as a subscriber in the vidiROOM. Question on run. Are you ready for run? Long upside target. So a lot of resistance here. Last time we looked at needed to be chipped away, and when it was, would likely launch the next up leg. No requirement to retrace the entirety of this downtrending channel. And that looks chipped away. So still held back by a lot of higher prior lows, but no assurance that this is worked through on any particular timetable. 1865, basically 1865 to, well, the prior high for different reasons. It's self-testing a separate resistance. So its recovery would really be confirmation, but get through 1865, not just probe it or overlap it, but a couple detached bars trending higher, and we'll assume the rally, the recovery, the reversal is underway. The first significant higher objective being 27.50. All right, and then upstart. So it held support. It was just a little short of being able to say it was greeting earnings from a position of strength, but it wasn't from a position of weakness. And now, and that is earnings, correct? Didn't we look at this on... Yeah, this was last night earnings. So, similar to what I was saying before about a different setup situation, there's no difference to me between 21 and 30. I mean, a little bit of difference, but as far as being part of the same range. So today being a breakout of that range needs, now needs something, a second consecutive higher close. Meanwhile, it would be helpful, at the very least, for today's close to be above 30.65. Really difficult to take today's break seriously if it can't maintain and close above 30.65. At any point under 30.65, even after two consecutive higher closes, create a position of strength. Back under 30, call it 30.50. Couldn't reject at that point, but would enter a deeper correction. And then finally, just close above 33.30. Closing above 33.30 and not rejected tomorrow. Two consecutive closes above 33.30. They don't have to be consecutively higher. Just hold above 33.30 two consecutive days. That too would qualify as a breakout, requiring at least an eventual third higher close. Or 100 higher closes, but at least. Pullback limit is 53.18. So, get that breakout on upstart. Subsequently, also recover 39. And at the very least, we'd be looking at the upper end of the range, 48 being the next higher target. I'd prefer that any pullbacks hold 27.75. Under 27.75 starts to look a little suspicious, even coming from a position of strength, just telling us it'll recover, but it's going to detour down first. So if this starts breaking back under 30.50, let's look at it again and see how that's doing. Pullback limit at 53.20 being probed. 3-minute low to testing it is being established at 14.50. 1 or 2 point buffer, room for noise. I mean, there's an opportunity here to absorb this reaction down, this noise. It is the noon hour. But here's what I want to participate in. As bullish as this morning was, first of all, as productive as it was, and then having staked out this ground and not giving it up until the very last minute, if this proves to be a detour, then the next higher reward is 53.76 and probably 54.81. Lots of potential upside. Otherwise, this has just finished a correction. We literally are at that pretty much a fork in the road. It's tough to get through higher prior lows. But could be these higher prior lows from Friday, or could be these higher prior lows from a couple different sessions last week. Even more difficult. Before launching a retest of Sunday night's lows. But if we're already finished with the bounce, it's possible to get back down to Sunday night's lows, neutralize their attraction, and be done with the decline. A lot of information in this, probably in how this resolves. A lot of bigger picture information. We'll see. We'll talk about it at the wrap. So if you're following the strategy, the 3x3, there's the 3 minutes down. We're pretty much sitting there at the end of 3 minutes, and at the 4th minute, if you were trying to grab something cheaper, 1 or 2 points lower, it never happened. And even though it's bouncing now, doesn't mean it's not going to retest that low and then recover, or that it's going to recover. This is just a system for trade selection. It doesn't have its own predictive value. It's based on predicted behaviors itself. All right, question on Tesla. Are you ready for Tesla? So it's pretty mocked up, but there's a really interesting set here. 197 and 201, is that right? 197 to 201.50. 197 is an extreme, 201.50 is its counterpart. Closing above 201.50 would suggest that 197 has held as being an extreme. Especially helpful that lower prior highs were tested by the spike down. That was interesting. Doesn't have to be retested. But the trend is down. So there's that. In order, if the buy is just to start positioning, building a position, adding to a position, taking advantage of what might be a temporary pullback, then this would be one of those points. But as far as a trade or knowing that you've got momentum on your side, even if just to add to a position, willing to buy even cheaper because the point is to build and increase ownership over time based on opportunities the chart might give you. Other than that, if looking to trade it because a pullback is done and momentum is likely reversing up, then very first opportunity for any such signal would be back above 205 and 208, two different patterns. Two consecutive higher closes above 205, 208. I don't know where we'll be by then, if that even develops. But two consecutive higher closes above 205, 208 should indicate that this leg is done, that at least a bigger bounce is underway. But as far as bottom fishing or knife catching, this is credible in this little channel. I'd still prefer to buy strength, just considering it's in a downtrend that preceded the market's reversal down. Just to be a little bit assured that it's worked out its issues. So I think I got caught up in stocks. I mean, you can do the math. Here's the 3-minute low to testing the pullback limit, 1 or 2 points buffer, room for noise. Look at that interaction at 12. I mean, I certainly didn't have it labeled at 12, but I do want to point out this is where this actually did, the inflection that it's responding to. So this is not a fresh move. Time-wise it is, but as far as being nearby its inflection, still overlapping its inflection, it's not. This bar is detached. And what that means is, since it's not actually touching the inflection, yet it's making a fresh low, as opposed to the bar prior that was still touching 53.12, making a fresh low versus its prior bar that was overlapping 53.12. This bar making a fresh low but not overlapping 53.12. That's a line in the sand. That and maybe the next bar after that are an opportunity to be a false break. Otherwise, if that's extended beyond the first 1 or 2 detached bars, in this case, under 53.04, that's a high degree of confidence that these are strong-handed sellers and we're heading down. So this is already a detached bar. Anything lower, I would expect at this point just to see the market behave appropriately. That it is, I mean, it may even be characterized as universal awareness, where the market is just dumping, right or wrong, sensing that the next consolidation is lower. So that detached bar, kind of an inflection point of its own. It's one of the techniques I use to locate inflections. And you can see how the market inflected. It was either, the downside was either done or about to accelerate. And it accelerated. Bounce limit is 5,300 half. It's the noon hour. This may be a detour. We don't know until exiting the noon hour. Just as we didn't know until exiting the morning's bias window whether all of its sponsorship was strong-handed or weak-handed. I mean, presumably at this point, it was weak-handed. Unless the noon hour is isolated. Bounce limit is 97.50. So what is a detached bar? If it's based on a relevant level, so it's not really an observable structural extreme. It has to be based on a calculable level. It's basically the room for noise beyond, in this case, a Fibonacci calculation that I've made. I'm kind of doing this. Bounce limit is 97. But we want to know, since we have a relevant level, in this case it's a cell signal, or this cell signal, which was the point of the conversation to say that we were on the cusp of proving this out. We want to know, is it just overlapping it? Because a lot of times there's noise. I use the metaphor of a car screaming down the highway and skids to a stop, but while doing so, it slams on the brakes and skids up on the shoulder, but it settles back in the lane. And that's what the detached bar is that skidding. Where's the car going to settle? So the detached bar is, or I should say, let's start this way. Every bar has two features to it compared to, for instance, compared to 5312. All of these bars have two features to them. Here's a bar that's touching 5312, making a fresh low and touching 5312. Here's a bar that's making a fresh low and touching 5312. Here's a bar that's making a fresh low. As substantial of a lower low as it is, 6 points, it's still touching 5312. It's within a tick, but I'm going to give it to it. Because I'm looking for absolute proof, not something to reinforce, or not something new to consider. I'm using this as validation, so a tick, may as well say it's still overlapping 5312. Finally, we get this bar. Finally, we get this bar that's clearly not overlapping 5312, but making a fresh low. And just to point out, then, that's the detached bar. Look at the next bar. Look at the very next bar. It's also detached from 5312, but it's not making a fresh low. This bar, now, making a fresh low and detached from 5312. That's the go-ahead. That's telling me I've got a couple of detached bars not touching 5312 and making their own fresh lows. That's new sponsorship. That's the market in touch with other selling pressure. Not just expressing selling pressure visible coming around the corner. Bounce limit is 93.50. I'm not sure if that helped. What I'm going to do is, next time I see a detached bar that isn't confirmed, I'll point that out too. But as we start seeing a detached bar, I'll point that out, and we'll be looking for the confirmation or not. And until there's confirmation, we won't have any greater degree of confidence that the downside momentum is intact. But here, let's go ahead and, this is somewhat, I don't use it very much on a reaction limit, but it's still a Fibonacci calculation. That's what this is based on. This bounce limit at 52.97. All of these bars are overlapping 52.97. Here's one making a fresh low, but still overlapping. This bar is overlapping, but not making a fresh low. Here's a detached bar that finally makes a fresh low and isn't overlapping 52.97. That's the detached bar. That's either an extreme or it's going to be confirmed as being in the midst of an ongoing move. So right now it's behaving as if that's an extreme. I don't see a counterpart. I don't see confirmation. Another detached bar that's both not overlapping 52.97 and producing a fresh low. So this leg may be, or this particular move may be on its, may have already bottomed. Notice how it's coinciding with the bias down target. So just more reason to suspect that it may be at its end. Doesn't mean it's never going to extend, but needs to refuel. So support at the bias down target, simultaneously oversold RSIs during the noon hour don't require being retested. Just one detached bar. This may very well be a low. Plenty of time before the bias window lapses. So plenty of time to recover the bias down signal. Recover 53.04. Exit or enter the afternoon bias window at 120. Rejecting tests of both PM bias down parameters. It's not synthetic bias up as it would be. That setup in the morning would be a synthetic bias up, meaning it would put into play offsetting tests of both bias up parameters. But it still tends to be pretty bullish. So we're watching this bounce limit. Bounce limit, latest bounce limit, probe for 3 minutes. And fresh high, overlapping the bounce limit. Fresh high, overlapping the bounce limit. Fresh high, not overlapping the bounce limit. Not this bounce limit. This bounce limit is moot at this point. So detached bar. Now this is somewhat of a detached bar, a little bit, but a lot of overlap, but it's a confirmation. So we've got two detached bars. So one or two detached bars is a pretty big line in the sand. If that's exceeded, any fresh high here above 98.75, not a buy signal, but could be applied as one, just not consistently, so I don't focus on it. but it at least confirms that the bounce limit is violated. I don't want to be short above 52.99, really 99 or higher. We've already got 2 detached bars above the bounce limit. So very in the weeds, very granular, but it is market behavior worth knowing. Very tough to focus on in the middle of trading. But so I reference the detached bar, but we don't generally go through all the discussion. But if it helps more than it hurts, so even if 52.98 printed and it were in fact violating the bounce limit and downside momentum lapsed, that wouldn't necessarily know or let us know that we're reversing up. It wouldn't necessarily say that we're reversing up. It would at least say that downside momentum has lapsed, and that's all it would mean. It's not a binary choice. It doesn't default to the directional change. But at the very least, it opens the door to forming a bottom, to taking a bottoming action credibly. So meanwhile, also, it's not the only tool here. It's not the only indicator. The detached bar could be violated. It's not a requirement that means that downside momentum is done or can't be reacquired. And there are other factors, like what if this is forming a continuation pattern, bear flag. So I would expect that another fresh high, another bar that produces a fresh high, would be overlapping the bounce limit. Or it's so far removed that it would be rejected itself pretty quickly. But it would necessarily confirm the violation, and we'd have to be prepared to re-enter short pretty aggressively. At the same time, it's moving so far from the extreme that it might be triggering stops anyway. So just a real quick update, bigger picture. Just that buyers had a huge opportunity and they could still re-engage with that upside. The relentless overnight trending that found reinforcements post-open, exiting the first 15 minutes above the overnight high. That then influenced the AM bias window up. Not until the bias window started lapsing did it finally give way. It did give way, and that break was maintained going into the noon hours, so now buyers are right back where they were, needing to prove themselves. They don't get any benefit of the doubt just because they're higher here now than they were at yesterday's close. So bounce limit is 89. All right, this is an interesting setup. So watch 89, wash, rinse, repeat. New bounce limit being tested. It's overlapping 89, so it can't be a detached bar. Set that aside for a second. And let's just look at this 1 minute chart as candlesticks. See where this bar ends. No, false alarm. Big down candle offset by a big up candle would be a tweezers reversal. This was on its way, but it stopped forming. If this white candle were overlapping or at least pretty equal in size to the down candle, then we'd look at the 61.8 retracement and expect that to hold in a bullish reversal. And if it weren't holding, it wasn't a reversal. I'm inclined to give this an extra longer look just because it looks like that influence is past. But just to note, this high at 95, no bearish reason to probe 95. We were focused on 98 a few minutes ago, and now it's 95. I wouldn't be short above 95. Can always re-enter short, but back above 95 at this point, based on the construct of these bars, not very attractive. Ongoing testing of bias down target, any kind of bullish scenario recovers the bias down signal pretty abruptly. I mean, there's still plenty of time that it doesn't have to be a steep surge, but it should start to get to work on reversing back up sooner rather than later. And the bias down signal could be recovered coming out or through the bottom of the hour, just to invalidate the bias down that was triggered at 120. And still be credible for putting a bottom in for the afternoon, or for the bias window. Still the final hour that could break lower, but first things first. All right, so back above 98 would signal that this leg was likely reversing up. Or at least it would get a benefit of the doubt until disproved. Helpful to know what the market participants are thinking when I say detached bar. Yeah, and I really don't know. I'm not sure. I don't think it's being viewed. Market participants are generally involved in, or definitely involved in creating it. But I don't know that they're really conscious of it. I think it's more of a gimmick. That's how I treat it. I mean, I stumbled upon it. It's just not consistent or constant enough to be the signal, but it definitely qualifies as a red flag. So if I thought there were any kind of proactive, conscientious participation by participants in forming that, then it could rise to the level of creating requirements. All right, YouTube simulcast. I'm going to be disconnecting now. So we'll do a promotion in the next couple, 3 weeks. And you're welcome to take advantage of this, the free trial at any time. That's right on the site, or this second link, if you look in the chat, to the special savings to be able to lock in 3 terms of the of vidiROOM. As I say, it's a trading learning environment. I'm teaching my methodology, just different insights that that I've discovered in market behavior, but also the signals. We didn't do a lot on Fibonacci today. I've just basically laid them out, not with any discussion. They're inherent in the bias signals. We really didn't go through what those, how the bias parameters are applied. Subscribers know, and there's plenty of documentation and supporting information on that. But that's a whole day in the onboarding emails. So if you're going to get that link, get it now. And if you need it but missed it, you can email me, rod@viditrade.com. Make sure you subscribe to this channel. I think you are if you knew about this test session. Like it if you could. But interesting. All right, everyone. In the YouTube simulcast, thanks for being here. Take care.